Hello, good evening. My name is Boris Sapozhnikov and I am a mortgage professional and working from Winnipeg, Manitoba, Canada. Today we will have a webinar. Webinar will be divided in two parts. At the first part you will see a presentation, and at the second part you will be able to ask questions and I will try to give you answers. So today we are speaking about the refinancing. Don't worry about to take notice because this webinar will be recorded. So with the link that you currently have, you will be able to access to this webinar and watch it again and again as many times as you need. Also, you will be able to share this webinar with your friends. So, today we are here because you want. You probably want to get lower interest rates, or maybe you want to get a lower payment so you have additional cash on your hand, or maybe pay out your mortgage faster, to consolidate debt, to renovate your home, to pay for your education or education of your children and grandchildren, to access the equity cash in your home, to buy another home, to buy a car or boat, to invest, RSP, TFSA, RSP, or maybe just because you want to learn about the mortgage refinancing process. It doesn't matter what is your goal, approach is very similar and we will discuss it today. So what is the refinancing? Refinancing is the process of replacing an existing mortgage with a new loan. Regardless of your goal, the actual process of refinancing works much in the same way as when you applied for your first mortgage. Generally, refinancing is a good option if the new interest is lower than the interest rate on your current mortgage and the total savings amount outweighs the cost of refinance. If you watched maybe different YouTubers or you maybe was searching online about refinancing, you maybe come across that says, oh, if interest rate go down at least by 1%, you can do, sometimes it's even 0.5%, you can do refinancing. I will say it's not really true. You actually need to calculate every situation based on personal circumstances before you make any decision. I honestly believe it doesn't exist rules that say, okay, if you have 1% difference, so go ahead and do refinancing. It's basically common mistake to do refinancing based only on interest rate. But it's always good to do refinancing when interest rate is lower. Now, refinancing isn't free and requires fees like appraisal, title search, and other fees. It's very important to determine whether refinancing is a wise financial decision. So here I want to speak about types of costs. So what cost us to do refinancing? First of all, if we are doing this in the middle of our term, we will have to pay some mortgage prepayment penalty. And it can vary from $100 to several thousands dollars. We will need to pay some legal fees. We will need maybe to do title insurance, depend by province. We should do land title searches, registration of mortgage. We need mortgage discharge fee to pay to your former lender, and of course you need to do appraisal of your home because we need to know what is your current cost of your house. What is important to pay attention here is that prices differs different from province to province, and total cost maybe not be so high, and every person has their own calculation of these types of costs. And I will speak further what we can do about these types of costs. I would like to say thank you to Natalia Svechin, who helped me with this list of types of cost that everyone can meet when he is doing refinancing. Let's start with the first example. Okay, so we have a home that cost $480,000. On November 1st, 2020, this house has a mortgage balance $372,000. People who purchased this home just started it pay 8 months ago, so even less than a year. The mortgage rate was 2.7 and they signed contracts for 5 years. Their current monthly payments is $1,894, and interest costs until the end of their current term is $40,011. So what I would like to know, is it worth to refinance this home? Probably not, because they just started to pay mortgage, but probably yes. So let's check some fees. After doing analysis of these penalties and other fees, I was able to find the total cost of refinancing more than $10,000. In most scenarios, people will say, oh, I need to pay so much penalty, it doesn't worth it, and they stop at this point. I'm always suggesting to do full analysis, because depend by your goals, it may be worth it. And look, so what happened during the refinancial process? So I'm taking this amount, $10,027, and I'm actually adding to the balance of the mortgage, $372,000. So new balance will be $382,027, and it's under 80% from the value of the home. It's good because it means that this house will not require any insurance on their mortgage. I mean mortgage insurance. Let's say they shopped around and the new interest rate that they find not very good. Normal interest rate 1.89. You probably know that right now in Canada different places have different lenders, have different interest rates. So this one is what proposed for this specific family. After calculation, we found that new payment is $1,796 monthly, and new interest cost will be much more low, $28,610. It's important to compare interest cost until the end of the same term. So if we will leave everything as it is, it will be $40,000. But if we will change to the new interest rate, it will be around $28,000. So how I am doing the final calculation? I am adding to the new interest cost total cost of refinancing, and I am subtracting this amount from the initial interest cost from the original mortgage, and I got $1,374. So this family, if they will do refinancing, they can save $1,374. Somebody will say it's not a huge deal, it doesn't worth it, and maybe not do anything. Another family say, no, it's still money, I would like to do refinancing and go forward. Here I am providing a summary of the first example. So, what happened at the end of the term? So I want to provide and look on and do analysis only what happened at the end of the term. So mortgage balance $313,523 if we are not doing anything. If we are refinancing mortgage, at the end a balance will be higher because of penalties. What is pros of refinancing for this current situation? This family saved $98, almost $100 monthly. Until the end of the same term, this amount, it will be in total savings. Because they pay less interest, they save in total. After more than $10,000 of penalties, they still in win situation, they save $1,374. Of course, our mortgage balance is higher at the end. Is there any exit from this situation? Yes. What this family can do, they can save this $98 and have at the end more than $5,000, and at the end of the term just pay it towards the mortgage balance. So they will be in absolute win situation because their refinanced mortgage balance will be even lower than $313,000. It will be around $311,000. So what if this family would like to go forward? I definitely recommend them to go forward because they can save money. It's not a huge amount of money, but it's still saving. Is there another way to save money? Let's say the same family wants to save even more. How can they do this? Yes, they can do this. All-in-one or hidden gem of the mortgage world. Some of you maybe heard about this, somebody maybe never. So I will do a short introduction. What is the all-in-one? The general idea of all-in-one, so you have main account or checking account that is not really checking account. It's mortgage account. And anything that you're making, any income that you have, any checks that go into your checking account, instead to go to the just regular checking account, it go into the special all-in-one account. So basically every check that go inside, it's paying down the mortgage. How we are using money from this account? The same way as from any other account. Why this way is better? Because, for example, if you have several MasterCards or you have some other expenses, you are not paying these expenses every day. You're paying these expenses once a month. If it's an example of mortgage, like if it's an example of mortgage or credit card, you also can pay mortgage weekly or bi-weekly, depends by what you choose. But usually all your expenses, like credit cards, it's once a month, is daycare, it's once a month, some sport fees, it's once a month. So why it's important, I'm always saying once a month and once a month and once a month. Because when you're getting money or your income, it's not once a month. You're getting your salary or semi-monthly usually, or bi-weekly. Some families getting salaries every week. Sometimes it's several like husband and wife working, and sometimes husband getting salaries on Fridays of this week and wife getting salaries on the Fridays another week. So a lot of money going into the account, and you basically don't really need them until you need to pay your bills. And all your bills is just once a month. So what happened in regular checking account is just money right there. But what happened in all-in-one, money that going into your checking account starting to work and decreasing your mortgage balance. So basically what happened, your mortgage going pay out faster. You pay less interest even if your interest is higher. Let's go back to our example. So if you remember, this is what was value of the home. This is $382,027 is refinanced mortgage. This is a new payment, and this is interest cost, 1.89%. Okay, this is interest rate. So look what will happen if I will put the same mortgage with the same family into the all-in-one account. Okay, so please look on this side where is the current way and versus Manulife one way. So if family will continue or refinance their mortgage with the current way, they will be free from mortgage in 21 years and 7 months. So almost 21 and a half years. If they will divide, please look on this side where is the borrowing limit. If they will took all their mortgage and divide into the two accounts, one is regular mortgage account, whereas we have $294,685, and they will put this amount, $88,826, into the main account, and look on this interest rate. 3.05 interest rate on the main account, 2.09 interest rate on the fixed 5 years closed on this second account. So both accounts under the interest rate that much higher than interest rate on the current way. But because the system is different, what will happen? The family will be free from mortgage in 17 years. In 3.5 years, in 4.5 years faster. So in what I'm trying to say by showing this example, the interest rate is not always the most important thing. It's important how you and what are you doing with your mortgage, how you divide your balances on your mortgage, and how it will be paid out. This table will show even better what will happen year after year. So with interest rate 1.89, after full 5 years with the regular mortgage, the balance for family will be $303,900 $107.51. But if family will divide, as I recently showed, their mortgage for two accounts, one for fixed and one for manual one checking special main account, after the first 5 years balance will be much more lower, $285,025. So basically it's not only family will win because of refinancing. It's not only they will save money monthly. It's not only they save money in total on interest. They also will save money and they will be more equity in their house. If after 5 years they will decide, for example, sell their house, they will have extra almost $9,000, even more, 285. We have here almost $19,000. After 5 years, they have extra $19,000 in their equity that they can use for whatever they want, or just leave it in the house and finish to pay out their house faster and be free of mortgage, forget about mortgage in short after 17 years. And this is what refinancing help to do. Okay, so let's look on the second example. On the second example, we have home that values $370,000. On November 1st, 2020, 3 years paid. It means they slightly in the middle. The outstanding balance on the mortgage just $170,000. They have mortgage rate 3.1%. So they should still pay 2 more years with this interest rate. They pay $1,414 monthly, and interest cost until the end of the term $9,767. That it's not really big, just because they don't really have a big balance on the mortgage. After the checks of refinancing, look what we find. The total cost of refinancing will be more than $12,000, and it's because of the penalties. So what I tried, or what I wanted to show in this example, if you remember in previous example, it was just beginning of the 5 years. It was the first year of 5 years. Here we are after 3 years, and penalties even higher than in the first example. So every circumstances is different, and all total cost of refinancing can be totally different. Even without going forward, I can definitely say this family shouldn't even consider refinancing. Maybe in a year, if penalties will decrease, but not at this moment. But I want to just show calculations. Okay, so let's say we have $170,000 and we want to add $12,156 to the balance. We have a new refinanced mortgage. Let's say family will get this interest rate. Good interest rate. Why it's good? Because it's more than 1% difference between existing mortgage rate and the new interest rate. They maybe even can get lower, but because total cost of refinancing is so high, they will not save by refinancing. You can see that even interest rate is lower because of penalties. they should pay even more monthly. So this is what always I'm saying to the families when you want to do refinancing. And just because a mortgage rate going down and difference is 1%, it doesn't mean that in your personal circumstances you should jump and do refinancing. If you go to your lender, they probably say, yes, interest rate is going down, let's do it. And they will definitely be interested to do it, but it's not worth for you. Because of this, I strongly recommend to do these calculations and checks with your mortgage professional. So new interest cost is lower just because interest rate is lower, but again, if you add in the total cost of refinancing and you add in the new interest cost and compare it to the original interest cost, you will be in minus more than $9,000. So basically it's another calculation that proving it's not worth it. It's not worth it. So what is the difference between example 1 and 2? In example 1, we had family that just got a mortgage, and what usually people suggesting when you just got a mortgage, pay several years and do refinancing maybe later. And it's wrong, because in the example 1, if we will do change in the mortgage right now, they can win a lot of money, especially if they will use all-in-one. But if they decide not to use all-in-one, they still winning and saving money. This family paid 3 years, and somebody maybe say to them, it's perfect interest rate, jump and do. And if they will jump and go to the lender and do refinancing, and lender will be happy to do it for them, they will lose thousands of dollars, almost $10,000. So what I try to explain, it's no rule. You can't find, and even if you read a lot of articles about the refinancing and you watch different YouTubers say, it's go and do refinancing because of this, it doesn't exist one rule that says, interest low, by this, do refinancing. Or you in the beginning of the process, no, wait. No, it's not true. So when go and do refinancing, when it's worth, when it's not worth, I'm always suggesting to work with a mortgage professional. Why? Because if you have somebody who is a mortgage professional who can check and calculate this for you, you will be able clearly know if you should do, if you can do, is it worth, it doesn't worth. Sometimes people say me, I found online mortgage refinancing calculator. I checked it and it shows me that it's worth. It's also calculated penalties, it's also calculated this and that. All mortgage calculator built by the way they approximately showing you, and then can't calculate exact amount. You can't calculate it by months, it's usually calculated by years. So they are giving very rough idea, but they're not really calculating exact amounts. So if, for example, you will use one of this calculator, for example, 1, it's probably say it's not worth for this family to do refinancing. But I just showed that it's worth, especially if they use all-in-one. Now let's go to the next example. And honestly, it's my favorite example from all these examples. Why? Because with this example, I am going to show you how from the situation where the refinancing was not really worth it. We create situation when refinancing is worth it, and even better. So I hope you're still with me, and let's pay attention on this example. As I said, you don't need to write down anything because this webinar is recorded, so just pay close attention what will happen now. So family has a home valued $570,000. On November 1st, 2020, it's 3 years behind, and the balance on the mortgage $200,000. The existing mortgage rate 3.1, amortization 12 years, it means that 12 more years and family will be free of mortgage. And currently they're paying monthly $1,664, and interest cost, if they will continue to pay another 2 years until the end of this current term, will be around it's exact amount, $11,490. After checking penalties and everything, we found the total cost of refinancing for this family, its total cost, its penalties, its lawyers' fees, all fees together, $4,200. I am taking this balance and adding to the balance of the mortgage. By the way, I did the same in the second example and in the first example. Some families sometimes deciding to pay cost of refinancing. I am usually not recommend to do this because, as I showed in example 1, without to pay even dollar from your pocket, you're still in the win-win situation. Let's see what happened in example 3. So refinanced mortgage, $204,200. So they still need 36% to pay down until they will pay out all their mortgage. The new interest rate that was family able to get, it was 2.09%. As I said, in different family circumstances, it's not always to get better interest rate. And shortly I will show you in another example when you will have much better interest rate, but you still can do something different. So let's say interest rate 2.09% and new payment $1,604. New interest cost $7,893, and we do the similar calculation. I'm taking $7,893 new interest cost. I'm adding to this cost total cost of refinancing $4,200, taking it from interest cost, and unfortunately I'm in a minus $603. And you can say, Boris, what's the reason to provide again fail? We failed here. Yes, because in example 2 you was in minus. Now in example 3 you're still in the minus. So what's the reason to do refinancing here? And if you will use online calculator say it's not worth to do refinancing. But what we can do here, even with this interest rate 2.09%, so this family decided to go forward with refinancing, and not just go with refinancing, purchase another property. This is what they decided. If you go back on my example, you can remember the total value of the home, $570,000. And the balance on the mortgage relatively low, just $200,000. With all the cost of refinancing is $204,200. family decided not to worry about this $600 and go forward and refinance this mortgage and purchase another property. Now I'm speaking to the investors. A lot of people saying, I want to be investor, but I don't know how to start. I want to be investor, I don't know how to start. This is exactly an example how you can start. So, this family decided to purchase condo. The cost condos in Winnipeg varies. This is one of the example of the condo that cost $200,000. It's the total cost of the condo. This condo has potential of average rental income $1,300 per month. Honestly, I can say it's relatively low amount of income for this type of condos. I know a lot of examples when people have condos and their rental income much more higher than this one. But let's use this rental income. In order to purchase this property, they need lawyer, they need to pay fees, they need to pay taxes. Total closing costs here in Winnipeg can go up to $6,000 in the cases that you purchase this type of properties. Look what happened. I am taking this 6,000 and adding to this 200,000. So in total is $206,000. Go back to our example. I am adding this to the $204,200. So it's current mortgage balance plus refinancing. Everything I am put together without take a dollar from the family as a new refinanced mortgage that is still under 80%, so this mortgage doesn't require any mortgage insurance. And I put this amount under the same relatively high interest rate, 2.09%. By increasing amortization just in 3 years, you remember former amortization was 12 years, I increased it purposely for 3 more years. This family will pay monthly $2,655. This is new mortgage monthly payments, but it's not real number. Why? Because $2,655 minus a new income, rental income from this property will give them $1,355, and it's much more lower than was their former monthly payments. Remember how we started? We started with 12 years, with interest rate 3.1, and with payment $1,664 monthly. Now the family will have, instead one property, 2 properties. Second property free of mortgage. And I want to put accent on it. Second property fully free from mortgage. So from year to year, this property will give just income. More than this property will increase in value. So if today it costs $200,000, in several years it will cost more. More than this, the family save monthly $309. So if they were going to the mortgage refinancing calculator, what was mortgage calculator saying them? Because of this minus, it's not worth it, leave it as it is. But after consultation with the mortgage broker, after speaking about the family goals, what we find that by investing in another property, they can basically decrease their monthly payments. Yes, they will pay mortgage for 3 more years, but they have another property, free of mortgage, another property. At some point, if they will decide to retire, they can sell their current property that worth more than $500,000 and move to this property, because this condo, it will be more than enough for the small family or retired family, and they will not have any mortgage on their property, because when they purchase with using equity from their current house, and they use it to buy another house. This is just one of the simple or basic examples how to use equity. It's more than one way how to use equity from one house to another house, and how to create income, and how you can basically, by refinancing, not just save money, also create additional income for your family. And again, I must to show all-in-one or hidden gem of the mortgage world. Why do I want to do this? I'm going to show you how this family, by doing the property purchase, by holding 2 properties and using all-in-one, can even do better than it was in the previous situation. Okay, so I would like to remind you, so what we have a property. And what's the value of the property? $570,000. Is it current? It's a current home value. What is your current mortgage balance? It's $410,200. Why we have this balance? If you remember, we have this property, and we used equity from this one property and purchased another property, a new property. Okay, so look, what is your current interest rate? 1.5. Why I put here 1.5 interest rate? Because I would like to show you how even if you get a mortgage with so perfect interest rate, just 1.5, you still can be in better situation or in better circumstances if you use all-in-one. So current mortgage payment is $2,546. It's lower because its interest rate is 1.5. And let's see what will happen. I divided family's mortgage that was more than $400,000 into 2 accounts. Sorry, I have to return. Okay, so I divided the mortgage balance into the 2 accounts. You need mortgage professional, you need somebody who will calculate how to divide this account. If you are not doing this in correct way, you will never be in extremely win situation. You can win some money, but not really what you can win. So look here, I put $153,794 under the fixed rate, under 2.09. This interest rate much higher than 1.5. More than this, most of the balance I put under the main account or checking account. Interest rate even higher. It's not just higher. Imagine to put money under the interest rate that higher by 1.5%. What I'm trying to say? I'm trying to say by using Manulife One, you can create situation that even if your interest rate's higher, you can actually save more money if your interest rate is lower. It sounds like absurd, but it works because interest rate on the main account calculated by the different way than interest rate under the fixed 5-year closed account. If you want more information about it, I will be glad to share this information with you. So, if we are going the first way, or here on the example current way, and we going with interest rate 1.5, projected time to be debt free for this family 15 years. Remember, I said amortization 15 years. Why? Because we borrowed more money, we purchased another property, we added 3 more years, it was 12 years, we added 3 more years, 15 years. Even with interest rate 1.5, it's much lower than 2.09, we still will continue to pay 15 years. But if you will use all-in-one, you can be debt-free in 10 years, 5 years faster. So if family will go by this route, look, they had a property and they were paying monthly and they were able to continue because they checked online, a calculator online said it's not worth it, you're in minus. Instead of this, they used mortgage professional, they spoke to the broker, they decided to purchase another property, they created additional income, they moved, refinanced their mortgage to the all-in-one. As a result, they will pay less in interest. They save $5,000 in interest in the next 10 years. They will pay out mortgage 5 years faster. They will finish just in 10 years. And it's an amazing. In 10 years, they will have 2 properties free of mortgage. Just think about it. They can continue their way. Just continue to pay their mortgage. And if you remember, I can go back to the example at the beginning of the example 3. They will be free of mortgage in 12 years and will have their property, and they don't really think about refinancing, their balance mortgage is low and everything fine. Instead of this, what they can do? Sorry. Okay, sorry. So instead, just to continue next 12 years, they can jump to refinancing, do it with Manulife One, be free of mortgage in 10 years instead of 12, and be owners of 2 properties instead of 1 property. Maybe somebody will say, oh, it's too easy, show numbers, but in real life it's different. Yes, real life is different. But math in financing is very important. And if you just continue to pay, you will pay high interest and you will continue to make money for banks, not for yourself, for banks. And yes, you will be eventually free of your mortgage in 10, 15, 20, 25 years or whatever. But if you're using this financial tool, like financial tool, if you're using it correct way, you can be free of your debts much more sooner. You can be owner more than one property at the same period of time, and you can create much more income, and you can do much more other things. If you look on, I want to show again, if you look back on this picture, maybe you paid attention, here is a borrowing room. It's what many people know as a HELOC or credit line. It's already inside of this program. So if they have some certain circumstances that something not going well, they have money to borrow. And every time that they pay something towards their equity, this 45,800 is just a beginning. It's growing, it's bigger. And if they need emergency money, they always can use them. So if they use emergency money, of course, they will not be free of mortgage in 10 years, but it will be in case of emergency. More than this, if they will be constantly in touch with their mortgage professional, if they will look for financial advice constantly, they can even be faster, free of debt, faster even than 10 years. What I did, how I divided these accounts, it required some math to do, and I can do this during this presentation. But if you will come to a point with me, I can show exactly how in your personal circumstances we can do this. Okay. Okay, so thank you very much that you're still watching with me. I showed you 3 examples, and I believe and I hope that you better understand what is the refinancial process, and you will use this tool smart. And I want to give some advices what mistakes to avoid when you're doing refinancing. Let's say you will decide to go this way to do some refinancing. What to avoid? And first of all, most of Canadians and North Americans not considering a refinance at all. Why? Because they hear about the penalties. Oh, penalties $10,000, I will not go to do this. Oh, penalties $20,000, I will not go to do this. It doesn't matter what is your penalty. What does it matter if you can use refinancing and build something in your equity? And how you use refinancing, this is how it's important. If you are not using refinancing and not considering refinancing, you just helping banks or lenders make money. You're not saving on any interest, anything. You just wasting the money that you making. And we know, especially during these pandemic days, how hard to make money, and I don't want it will happen to you. So I'm strongly recommend consider to do refinancing. Sometimes people do refinancing and they're not looking in future plans. What can be future plans? It can be education of your children. What can be future plans? It can be a trip. What can be future plans? It can be purchase of another home. It's important, if you are selling the current house and you want to move there, we need to look in the full picture before we are deciding to do refinancing or not to do. Sometimes people forget to check their credit history, credit scores. They're not really checking this regularly. And if you're not checking this, you maybe will be in position that you're not able to do refinancing. More than this, when you will come to your renewal after your term will end, your current lender maybe will say no and will not renew your mortgage. Because if they will check your credit history or your credit score, and they're frequently doing this, especially during today's circumstances, they may say, oh, your credit score now down, I'm not giving you mortgage, and you will be forced to sell your house. I don't want that it will happen to you, so please check your credit history, check your credit score, speak to your mortgage professional, speak to your mortgage broker, speak to somebody who is understanding financing, and always look the way how to improve your credit history, how to increase your score. A lot of people, when they're doing refinancing, they're speaking only to their current lender. Why? Because they know somebody there, or because it's easy just to call to the same lender. So they continue to work with the same bank years after years, even when they do refinancing. Please do shopping. When you buy TV, you definitely do shopping. I believe you go and check prices in Walmart, Best Buy, online, Amazon. You checking prices. I'm sure when you buy TV, you checking and you shopping around. But people who is doing changes with their mortgages, they're not really shopping. They are thinking that their current lender, because they are loyal, will do the best. No. Who can do the best for you? It's only your mortgage professional, because he doesn't work for this specific lender or another specific lender. He will shop and will work for the best interest of you. This is what I spoke about. People not shopping, and it's not good. You need to shop around. And another example, I saw a lot of family who is shopping when they are buying house. They are shopping and checking this house, and they are working with realtor, or sometimes they're not working with realtor. They are shopping and looking at more houses. How many banks or rental or lenders they are checking? Usually one, rarely 2 or 3. In the best scenario, they will work with a mortgage broker, and mortgage broker will do shopping for them. So please, if you're asking my advice, do your shopping, check where is the best scenario, or ask mortgage professional to do it for you. Again, please don't look on interest rate. It's good to have lower interest rate, but it's not always solution. With example number 3, I showed that even if your interest rate will be 1.5, amazing interest rate, 1.5, the family will do much better, will pay much less interest, will have much more income, will be free of mortgage 5 years faster. And it's just one example, with interest rates that higher than 1.5. Okay, so please do math and check everything before you just jumping to the lower interest rate. People sometimes choosing the wrong term of amortization. You need to calculate amortization with your broker, or do it with a lender, or do it with somebody who understands in mortgages. Because if you calculate wrong your amortization, you can do too long period or too short period and ending in not very good refinancial situation. Your mortgage amortization or length of your mortgage should fit your needs. It shouldn't fit needs, not lender, not broker, not somebody else, your needs. So pay attention on this. People sometimes taking out other loans during the financial process. It doesn't worth it. If you're already doing the financial process, wait with other loans. Why? Because you may use during the refinancial process equity from your home. You can create HELOC account or you can use all-in-one where you will have free access to money that in your equity, and you will be able to take loans from there. So basically it will be not loans, you will just borrow from the cost of your house and you will purchase whatever you need to purchase. Please don't take any random other loans during the financial process. Refinancial process, it will do it for you. And if you have in mind, okay, I want to refinance my home, but I want to purchase a car, and I want to spend some money on my vacation property, and I want trip. Speak about all your ideas to your mortgage broker, because he or she will be able to calculate what is worth and how to do this through refinancing. Please don't take random loans from different sources. And if you already did this, check with your mortgage professional. Maybe they can take all your debts and put it under the equity and refinance it under the one simple clear mortgage with very clear simple one payment instead of 3, 4, 5, 6 payments on different cars and different debts on cars or whatever you have. About the switching jobs. Why it's mistake? Yes, it's positive to switch job, especially if you can make more income. But if you decided to switch job or you have a plan to switch job, don't do refinancing. Switch a job, find another job, do a change in your career, wait another 3 months. It's just for regular employee. I'm speaking about regular employee who is working for companies, organizations, regular, not self-employed, not businesses. I'm speaking just about regular employees. If you decided to switch job, jump, switch job, complete this process. After 3-4 months, start to do refinancing. So during this, speak to your broker and please let him or her know if you are planning to switch a job. It's very, very critical and very important. People waiting until the end of the term. Why? Because they know that they can do transfer mortgage from here to there. It's called switch, it's called transfer of the mortgage at the end of the term, no penalties. And a lot of lenders even advertise, oh, please switch mortgage to us, we will get lower interest rate, and we will pay your lawyer fees, and we will pay your other fees. You probably heard about this. It's in some circumstances, it's worth to wait until the end of your term. But I just showed you 3 examples. In the first example and in the third example, it's not worth to wait. It's worth to do it now. In the second example, yes, you need to wait because it's too high penalties, and its penalties depend by lender. When you negotiating, think about negotiating fees. If you remember, we spoke about the fees. I will go back. So remember, all these fees negotiable except mortgage penalty. How you can negotiate it? you have to speak to your mortgage broker, you have to speak to the lender, you have to speak to the lawyer. Usually what I recommend, speak to your mortgage broker and he or she will find way how to negotiate all these fees, because they can contact lender and negotiate some fees, and they can do a lot of things for you. Okay, sorry, it's different slide. Okay, so please don't forget, you need to negotiate fees. Okay, so now what some lenders and mortgage professionals can do for you. Okay, when you're negotiating fees, sometimes some lenders, some brokers can pay or reimburse legal fees, discharge fees, appraisal fees, title insurance fees. All this reimbursement, they up to certain limits. So if you go to any lender and they say, oh, transfer mortgage to us, we will pay your fees, you should ask what fees they pay and what is the limits. Is it worth it or not worth it? Speak to your mortgage broker and check with your mortgage broker. Maybe it's not worth. People usually asking me what mortgage professional or what mortgage broker can do about the fees. When mortgage broker shopping for lender, when mortgage broker looking for the lender, sometimes he can find lender that can cover certain fees. More than this, some mortgage professionals can cover some of the costs. If you will decide to work with me, and if you will decide to refinance your mortgage with me, I can absolutely guarantee that I will cover some of your fees up to certain limit. Okay, so how we start to refinance mortgage? Start with clear financial goal and speak about it to the mortgage professional. You have to know why you're refinancing. You want to purchase a car, or you want to purchase another property, you want to save something for retirement, you want to pay for education, you just want lower interest rate. Speak honestly to your mortgage broker, mortgage professional, what is your goal or goals, and provide clear picture. When your mortgage professional will have a clear picture, he will advise you what you need to do next. And usually next step is clarifying several numbers. And most of the numbers you clarify with your lender, some of them can be calculated. What numbers you should know? You should know the value of your home. You should know from the value of your home what is your outstanding, like this is what your value of home, what is your outstanding mortgage balance. It's always lower than value of the home. You need to know how you pay and frequency how you pay. If it's monthly, if it's weekly or bi-weekly, you should know what amount of this payment and what is your current interest rate. You need to know what is your current term, if it's 5 years, 4 years, 7 years, and you need to know the date when it started. So it will be possible to calculate what is the rest of the period. You need to know all your amortization period. So for how many years you took your mortgage, for 20, 25, 10 years, what is your amortization period? And you can check with your lender what is your current prepayment penalty. And you can also check other fees. Speak to your broker, speak to the lawyer, and you can check what will be fees. Now, you can say, oh, it's too much work for me, I don't want to do it. You know what? You're right. It's definitely some work that you need to do. But how long it's actually to do all this process? It's not really long. You just call to your lender, or you write email to your lender, and you put all this value of your home, outstanding mortgage balance, mortgage payment, frequency, interest rate, current term, all this you put in your letter, or you're asking over the phone, and guess what will happen after? This conversation with your lender may lead to the offer from your lender. Your current lender will understand that you probably looking the way to switch or go somewhere else, or to refinance your mortgage. So your lender probably will say, you know what, I understand that you're probably looking for all these numbers because you want to switch, and they said, oh, I have a good offer for you. If they say that they have an offer for you, ask them for commitment letter. I'm going to repeat it. Ask for commitment letter. What is a commitment letter? That letter from your current lender, or from any lender, or from any broker that's saying, I promise you to provide this and this mortgage with this interest rate, with this term, with this amortization. This will be a penalties, or maybe it will not be penalties, and this is fees that you will pay. This is what you are looking in this commitment letter. When you have all this information from your current lender, you need to go back to your mortgage professional. Why? Because your mortgage professional do math for you, and we show you is it worth or not worth. In a lot of cases, lender have offers that it's good, and in some cases they have offers is not really good. So you need to speak to mortgage broker. Is it really good for you? And when mortgage broker look on your commitment letter, he may say that he maybe have better option for you. And this is how you change a lender and going to the new lender. If you think this process will take so long, no, it usually takes several minutes. Because if you already had thoughts about what you want to do and what is your financial goals, and when you give in a call to your mortgage broker and give this idea, it will be like 5-10 minutes conversation just about the general idea. After you go to your lender and you call to your lender or you email to your lender, all writing this letter or call this may take several minutes. If you write an email, it may be you will need to wait until they will respond you. It may take several days, but eventually you will get a letter saying exactly where are you right now. When mortgage broker know where are you right now, he will use math and will find the best solution for you. And we are almost at the end of the presentation. Thank you very much for being with me. All information is made available to you, and I cannot and don't guarantee the applicability or accuracy regarding your individual circumstances. Sometimes people watching YouTube videos and making financial decision is wrong. Please don't do this. All these examples, it's good for these 3 families, but in your personal circumstances, you have different income, you have daycares, maybe you have maybe a child in university. We need to look in everything, not just in these numbers. Just watching a video and jumping and do some refinancing, it's a bad idea. Please, I really encourage you to seek personal advice. And if you want, you can please call or email, and you will get free consultation from you, and you can call from any part of Canada, and you will get free consultation. And I'm helping Canadian all across Canada with their financial needs or any questions regarding their mortgages. So here is my phone number and my email. You can call, you can email me, and I will be happy to help, and I will be happy to look in your numbers. If you go forward with me and you will decide to do refinancing with me, and we will go through all this process, I can guarantee at the end of the process I will reimburse some of your fees. Again, I promise until the end of refinancial process, after you will complete refinancial process, I can reimburse some of your fees. And now it's a time for questions and answers. I'm going to check if somebody already wrote something in the chat. So now you have time. Please, you're welcome to write any questions if you have. So if you're using YouTube, you should have option to chat with me right now. If you don't have any questions, it's okay. If you have some kind of private questions, you're always welcome to call me. If you want to write me email, I will be happy to check refinancing and do some ask for you. Thank you very much for attending this webinar. Good luck with your financing. I hope that new year we will be more happy. I hope in the new year you will be financially more stable. I hope in the new year you will feel better. I hope in the new year we will not check what is the amount of the cases of COVID we have today, or what is the amount of cases was yesterday, and we will start to live our regular life. And I'm here to help with all your financial mortgage needs, and it doesn't matter in what part of Canada you're right now. Don't hesitate, call, email me, and I will be able to calculate all your mortgage needs. So I don't see any questions right now. So thank you very much, and have a wonderful evening.